The crypto market is incredibly risk sensitive. If you're in the stock market, you must understand the crypto market because it throws incredibly powerful signals. So you can tell if the stock market risk on behavior, that is, increasing prices, is coming back in, or the opposite. In this video, we're going to talk about the power of Bitcoin. There are so many misconceptions about Bitcoin and crypto and the alts. I hope to clear some of those up. Let's run the numbers. In news today, US judge rules in favor of human ingenuity, denies copyright for AI art. This is actually very significant. It means that the platforms that produce AI art or AI output can't own the ownership of what they produce. That means the owner of the AI system, according to this ruling, so far does not have a legal precedent to own AI work. In short, AI-made art does not qualify for copyright right now. This ruling is quite significant. It means that if you use AI image generating software or services such as Midjourney or DALL-E, the platform so far cannot own the copyright. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. When looking at the top 8 cryptos, what we've seen over the past approximate week, Bitcoin had a flash crash and it's just been consolidating across the weekend. We can see some upward momentum inside Ethereum's price. It did come down quite substantially, but it's managed to recover somewhat. BNB still under pressure. XRP looking good. ADA looking good. Doge looking good. Solana as well. And Tron always shines in the darkness. Each and every day we track Bitcoin and we're very interested in the structural support and resistance levels. Where are smart money buying and selling? The one thing that we do notice that there was a resistance at 26,295. Bitcoin came up, couldn't get through that resistance just yet, but there were some positive momentum or positive movement inside crypto. When it comes to structural support and resistance, this resistance level in here at 26,295 and the support level around that 25,757 mark, there where Bitcoin are currently going. If it's not going above, it's going below. And if it does come above, the next smart money sell area is 26,562. Expect some resistance there. In yesterday's video, Bitcoin was looking pretty good, and I suggested that we need to keep our eye on this structural level. If Bitcoin gets above it, that's fantastic. If not, it could come back, consolidate, and try to attack it again. If it doesn't get through, it's going below. But if it gets through, it's going above. Very, very simple. Especially inside crypto is so incredibly volatile. It's important to know where the safety nets are. Where is smart money buying? Where are they selling? If we know where they're buying and where they're selling, we're much, much better off. Of course, you could guess, or you could use different indicators that rely on past price behavior. But the problem is, these indicators are not marked up with all of price history. Here, we're looking at Ethereum from 2015. And when we pop our smart money levels on, what are we seeing? There's a smart money support level at 1676. There's also one at 1651. And approximately that's 1644. We also see smart money sell resistance at 1700 inside Ethereum. One thing that you should be very, very aware of, Ethereum cannot escape Bitcoin's gravity. What exactly do I mean by that? Overlaying Bitcoin's price On Ethereum, we can see that Ethereum and Bitcoin are just moving in the same direction. That's because no alt can escape Bitcoin's gravity. What does tend to happen, although, is something important. When the alts sell off, they typically sell down much more than Bitcoin, and that is a function of market capitalization. Very, very well done to the community that got that one right. When we look at upticks, because there's lower market cap, less money is required to move something either up or down. And what we can see here is Ethereum overextending the upward momentum inside Bitcoin, and also overextending the downward momentum inside Bitcoin. But obviously, they're both moving in the same direction. This is called directional correlation. When you see an article like this, Ethereum surges 11% after a report that the SEC, the Securities Exchange Commission, is set to approve a futures ETF, you know that Ethereum is still moving in alignment with Bitcoin's gravity. We just proved that out. No doubt, this is good for Ethereum. The SEC previously denied futures ETFs on ETH, or that is Ethereum. Of course, that will open the door for spot ETFs as well. The Securities Exchange Commission is trying to defend the US dollar, but with the Fed now basically coming through and acting as a foundation for a central bank digital currency, expect some really interesting times in crypto. Volatility is not your enemy inside financial markets. In fact, if there was no volatility, you could never make a return. Zero volatility means 0% return. High volatility does mean high variability in percentages, either up or down. Returning to Ethereum, one thing to note, no alt can escape Bitcoin's gravity, especially ETH. If ETH is going down, you can bet Bitcoin is behind it. You'll see all kinds of headlines. The critical thing for us to know, are they real or are they not real? When you understand the rules of especially the crypto market, no alt can escape Bitcoin's gravity. We've seen it with Ethereum. CTKS structure overrides. ETH was above smart money sell areas. It turned it to support. One thing that you must be aware of is the time basis of what you're looking at. If something flows up like this on the 1 minute chart, hey, yeah, that's pretty good. But the concept is, how is Bitcoin moving? You already know it was moving in the same gravitational direction, and ETH just overextended it, as we would expect. Yesterday, many questions were asked and answered by our beautiful global family. I just appreciate you all so very much. When we turn on the structural levels for Doge, what do we see? We were at this point in yesterday's video. Was Doge going up to the next resistance, or was Doge coming down to the next support, 636? What we saw is that Doge couldn't break through this structural resistance, even though Bitcoin didn't do too badly. Actually, let's overlay Bitcoin. This tells us something very, very important. You can see that Bitcoin's gravitational bias, and you can see price of Doge. This would be perplexing for a lot of people, but we have a very simple rule. CTKS structure overrides. What does that mean? It means that when we look at Doge, which is marked up since 2013 with the CTKS method, which you can learn yourself at ctksmethod.org or inside the masterclass, these structural levels are very, very significant. They're not formed from recent indicative price or stories. They are formed through scientific structural analysis. What this also means is that when they are strong, price interacts badly with them. If you have a resistance level, price tends to back off until it can gain the strength to push through it. We can also note in Doge, this 636 level is a support level. We must get through 646, and up here is a little one at 647 to gain positive momentum. We can see that Bitcoin Bitcoin's gravity pushed Doge down, and then it became suppressed because of this overhead resistance. This is really, really important stuff to understand. Therefore, we know if Doge couldn't get above that 646, it was headed back to 636, and that is exactly what it did. With the CTKS method, it's very easy to understand where price is going. Price moves from SL to SL. What is an SL? It's a Stanfield level. SL to SL. If it's not going above, where's it going? Please let me know in the comments. And if it goes above, where's it going? This is a very important active learning rule that you must understand, because it will make you a ton of money. There's a very important thing to understand. Bitcoin CME gaps are 35,000, 27,000, and 21,000, all round number retail levels. Which one gets filled first? In fact, it's got nothing to do with CME gaps. A lot of people will say, Ken, you're crazy. You don't know what you're talking about. Of course, the Chicago Mercantile Exchange controls Bitcoin. It's obvious. No, it's not. Ken, how do you prove that? Contrary to public opinion, Bitcoin is not owned majority by whales. Majority is retail volume. In fact, the whale volume of Bitcoin is 1.28%. That's not a big number. If the majority of ownership in Bitcoin was in fact the institutions, we would say the CME gap would be significant. But we can see that's not the case. What is significant is market structure. CTKS structure always overwrites. The structural support levels inside Bitcoin, when we zoom out, are between 24,267 and 24,620. That's the first area of support. And you can see it doesn't look like an area of support in terms of recent indicative price. Why is this the case? Because Bitcoin has been marked up since 2009 using the CTKS method, which takes into account all of price action, not just recent price action. The next area of structural support is between 22,114 and 22,823. Then there's an absolute raft of smart money support between 20,892 and 21,407. When you understand the CTKS structure overrides, what you find out is a lot of these kind of myths that are always playing out inside the market, such as CME gap fills. They're largely irrelevant, because what you're looking at, if you look at this particular price action, you can see that there is structural support. That is strong support at these particular levels. One up here and one just below. What we actually read from this is that when it comes to filling a CME gap, just don't pay much attention to it. You can if you wish, but it's structure that actually moves things. Just think about Doge. Not all structure is created equal. Yesterday, when we looked at Litecoin was overcoming several areas of resistance, and masterclass students, you can see that with the EC method. We were right here at this time. Remember what we saw on Doge, and Doge's structure kept Doge down. Poor old Doge. What is the structure on Litecoin? We just pop on the indicator. And if you would like this indicator, just pop across to ctksmethod.org. The first thing that we understand, not all supports and not all resistances are created equal. This smart money support at 64.72 is much stronger than the smart money support at 63.99 and this smart money support at 63.62. However, this structural resistance just playing in at 65.45 is quite strong. But we also know that Litecoin cannot escape Bitcoin's gravity. What do we see with Litecoin? Litecoin is following Bitcoin's gravitational directional bias. However, because of this very, very strong support and underpinning support below it, It managed to follow Bitcoin's momentum upwards. You can see this high and this high, this high and this high. This is how you use Bitcoin on your beloved alts to figure out what's going on. The next area of smart money's sell resistance is at 66.19. The good thing that hopefully you can see right now is that Bitcoin's directional momentum actually controls all of the alts, even the ones that explode higher or explode lower. And crypto is full of exponential price action, not regular price action. Crypto is exponential. And that's exactly why in crypto we must understand where the safety nets and where the ceilings are. If we don't understand where smart money is buying and selling, we're just guessing. It's always important to read the news, but it's important to contextualize the news as well. The greatest gainers, top 100 past 24 hours, Stellar, Rune, XRP, Monero, Tron, Carver, NFT, XDC, and Arweave. The greatest losers, top 100 past 24 hours, AKT, a cash network, HBAR, FracShare, Synthetics, DYDX, SHIB, GMX, Pepe, and Leo. Across the weekend, we did expect light volume, and we got it. 25.44 million in total 24-hour liquidations. And we can see over the past 24 hours, there's been more short liquidations than long liquidations. This pushes the price of Bitcoin up. And we've seen that. However, let's look at the past 12 hours. Majority still short. What about the past 4 hours? Very short. And the past 1 hour, very long. When you see green, that means the price is going down. And when you see red, it means the price is going up. Very intuitive. Active traders, make sure that you keep your eye on these liquidations. When Bitcoin comes down, the alts absolutely bleed. But when Bitcoin pumps up, the alts pump up as well. And we can see over the past 24 hours, there's always opportunities in the crypto market. What about the past hour? There's always opportunities. What about the past 15 minutes? You got it. There are always opportunities inside crypto. However, and this is a big however, you must keep your eye on Bitcoin's gravity. Bitcoin's gravity is controlling all the alts, the inverters, and the ones that align with Bitcoin's gravity. From a crypto perspective, it's very important, if not utterly essential, to keep your eye on Bitcoin. Also keep it on total. But how is Bitcoin moved inside the market? The US 2-year, the US 10-year, and the DXY will move Bitcoin, and move it does. The VIX will move it, and the major indices, the S&P 500 and the NASDAQ, and the subcomponents of those will move it as well. To get triangulated in with Bitcoin's potential strength, we know that the alts overestimate what is done with Bitcoin's gravity. So keeping your eyes on the tier 2s and tier 3s is absolutely critical to understand where Bitcoin is going. This is a real game changer because people typically only look at the chart they trade or invest in. We're much, much different. We are smart money. We are professionals and not retail. Why aren't we retail? So many people have retail channels on YouTube talking about buying on green and selling on red and all of those kind of things. Why don't we do that? Because we'll get slaughtered financially. Your goal inside financial markets is very simple. Turn a positive percentage from your invested or traded funds. To do that, you need high amounts of knowledge, to do your three-dimensional risk management every day, to analyze and understand how all charts are intercorrelated and interconnected, to understand the tier 1, tier 2, tier 3 market pulse. More importantly is to understand CTKS structure. Because we know the structure of what we're dealing with, we know how to get the percentage on the right side of our portfolio. We know how to scale in and to scale out. We don't go all in at once. The market is always throwing us shockwaves. Therefore, we have an abundance and positive mindset. Institutions use fear against you. They use fear to make you sell. They use fear to make you buy. Commonly, it's referred to as FOMO, fear of missing out, the fear of not getting in when prices are going green. And FUD, fear, uncertainty, and doubt, when prices are going red. Both kinds of fear, when you act on them, will absolutely harm your portfolio. Instead, we must keep positive and we must understand where the structure is inside financial markets. We become courage-based, not fear-based. We have three-dimensional risk management, so we know that the market controls our returns and we control our entry and exit, but we don't control it with fear. If you control anything with fear, you will create the fear that you dread. Instead, we control it with courage. We control it with knowledge. Purpuratum has kindly offered a CTKS partial masterclass scholarship. If you're interested in learning the smart money methodologies and techniques, the masterclass you'll find incredibly helpful. The link to apply for the Purpuratum CTKS partial masterclass scholarship is in the description of this video. And many thanks, Purpuratum, for your very kind generosity. It's very important to understand the rules of success inside financial markets, and the problem is those rules are largely counterintuitive, which means that if we obey common sense, which is, well, when you get the red, you've got to stop and run, and when you see the green, you've got to run in and get as much as you can. When we start to disobey common sense, when we start to understand how the institutions manipulate, when you start to short-circuit your own emotional responses, especially the survival instinct that makes you sell when the red comes, when you stay when you would otherwise run, you are on the road to financial freedom. Better habits create a better life, and with the daily positive affirmations for abundance, financial success, and happiness inside the CTKS Creed, we can show kindness, integrity, and gratitude every single day because opportunities and life reset daily. We know that life pullbacks give us the strength for the next life rally. We are dedicated and committed. We either win or learn and never blame. Blame just disempowers you. Blame costs you much, much more than the loss. And we always solve our problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.